Hey everyone, Pepsico reported first quarter earnings results, and in this video I'm going to review those earnings with the goal of taking a look at those earnings from the perspective of a dividend stock investor, a passive income investor. So if you've invested or interested in investing in PepsiCo stock for its dividends, I'm going to look at this quarter's earnings results and measure it against that goal of receiving dividends from the company. So, did this earnings results contain anything that could put those dividends in jeopardy, or did these earnings results include something that made the dividends more attractive? So that's what we're going to take a look at in this video here. So organic revenue growth increased by 14.3% for PepsiCo in the first quarter compared to the same quarter last year. And core constant currency EPS, earnings per share, increased by 18% to $1.50 year over year. Now, these figures, these first two figures, organic and core, these exclude last year's a big part of last year's results that included a sale of its juice division. PepsiCo sold it divested a juice segment. It sold it for a gain of around $3.3 billion. So when comparing this year's results to the same quarter last year, there was that big difference in there. So looking at it organically and looking at core constant currency EPS takes that sale and says, okay, let's look at the company without that sale because that's what the company's going to look like going forward. It's not going to have that juice division in it anymore. So let's exclude that and let's look at the company going forward. Overall, the revenue growth and constant currency EPS growth was excellent. PepsiCo demonstrated its pricing power, raising its prices for its products by an overall average of 16%. That's a lot compared to the same quarter last year. And impressively, unit volume only decreased by 2%. So they increased prices by 16%, but the total unit sales only fell by 2%. These people looked at the higher prices and said, that sucks, but they still bought it anyways. And that's the definition of pricing power. And as a dividend stock investor, you like to see that because that means this company can increase prices whenever there is any inflationary pressure at the company. So if you're a dividend stock investor, you're likely looking at investing in this company for the long term, maybe 10, 20 years. And it's likely that this current inflationary surge is not the only one we're going to see over the next 20 years. There might be more inflationary surges, but during this inflationary surge, as a dividend stock investor, PepsiCo proved to you that whenever there is higher costs, they can raise their prices and their customers will pay those prices. That's important because there were several companies during this inflationary surge that were not able to do that. They could not pass along those higher prices. Their customers said no. When they saw higher prices, their customers switched to a different brand, switched to a different product, and just substituted and switched away from that. So the fact that PepsiCo demonstrated its pricing power is very good news for dividend stock investors. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. More specifically, in the Frito-Lay North American segment, it increased prices by 16% and unit volumes were flat. So they raised prices in the snack segment by 16% and sales didn't go down. They were flat year over year. And this segment generated 1.6 billion of the 2.6 billion in operating income for PepsiCo in Q1. So this is the most vital segment for PepsiCo's business. It's not the beverages, It's the Frito-Lay snack segment. That's the most critical segment for PepsiCo. Management said the company will pay $6.7 billion in dividends to shareholders in 2023. That's incredible. And the first quarter results were so good, they were much better than what management was expecting. Management was expecting a bigger decrease in unit volume as a result of higher prices. Management was expecting customers to see these higher prices and to reduce purchases more. But customers didn't do that. They saw higher prices and they bought it more so than management was expecting. So now, because of what management saw in the first quarter, they're raising the target for 2023. They're saying, hey, it looks like this year is going to be better than we thought, right? Because our customers are absorbing these higher prices and saying, it's okay, we'll pay higher prices for your products because we like them so much. So Pepsi raising its 2023 revenue target of 8% to 8%. That's up 33% from the previously expected growth rate of 6%. And then they're raising their earnings per share target to 9%. That's up from the previous target of 8%. So both revenue and earnings per share are going to be better than expected for PepsiCo in 2023. Overall, it was an excellent quarter for PepsiCo, and it increases the sustainability of PepsiCo's dividend, and it raises the probability of PepsiCo actually increasing the dividend payment because they've demonstrated pricing power. They will feel more comfortable increasing their dividend payment because management will feel more comfortable about its pricing power. Earlier, I mentioned that investors will feel more comfortable about PepsiCo's pricing power, but management too will feel more comfortable about PepsiCo's pricing power, which will then give them more confidence to increase the dividend payment. Because management does not like to increase dividends if they feel like they may need to decrease them at some point in the future. So management will typically only raise a dividend if they feel confident that they're never going to have to lower that dividend payment. So with this demonstration of pricing power, it will give management the confidence that they will not need to lower the dividend payment if they increase it at some point over the next few years. Okay, so that's all I've got for this video. Thank you so much for watching. And if you appreciated this video, I'm going to make many more like this during this earnings season and the next earnings season and the one after that. So I'd be happy if you were to subscribe and stay tuned for those videos as well. Thank you so much for watching.